Hello and welcome back to our final lecture video dealing with chapter 2. When we come back in our next, or there is going to be another video, but it's not going to be a lecture video, it's going to be a demo video. Okay, I'm going to show you how to put together the ledger in Excel, and we're going to run through a bunch of journal entries. Okay, so that should give you some, hopefully some practice on working with debits and credits. But in this video, we're going to go ahead and look at the trial balance. What exactly is the trial balance? Well, trial balance, like we previously had mentioned, it's just a list of the accounts from the ledger, right? And it shows the balance of each of those accounts, whether it's debit or credit. Okay. The trial balance, it is always prepared at the end of an accounting period. Okay. And this is a very helpful tool for us because it helps us to ensure that all the debits and the credits are equal, right? So remember, when we analyze the transaction, okay, we went ahead and we said, okay, account or cash is increased and um, accounts payable is decreased. Okay. So then we went ahead and we said, okay, we got to do our journal entry, right? We have to identify which accounts debited, which accounts credited. And debits and credits always have to equal. Okay. So what this trial balance does is it ensures that our debits and our credits do in fact equal. Okay. In addition to being kind of a check tool for debits and credits, excuse me. This trial balance is really going to help us going forward, especially when we start putting together those financial statements, the income statement, statement of owner's equity. We'll see how to use the trial balance. So what exactly is a trial balance? Well, again, we said it lists all the accounts in the ledger. It has a debit column and a credit column. Okay, great. But notice how it's put together. Okay, this is proper form. It has a heading, right? The first part of the heading says, hey, Mike's Bikes. So it gives us the account, or I'm sorry, the company name. Then it tells us what kind of trial balance it is. Is it adjusted? Is it unadjusted? Is it closing? Well, we're not there yet. So it's just an unadjusted trial balance. We didn't make any adjustments yet. Okay. And it gives us a time frame. Trial balance is like a snapshot. It's just like the balance sheet. Here's your account balances as of this specific date. So we put the date on there, December 31st, 2016. And then notice what it does. It lists all our accounts, right? Starting with all our assets. Then we list our liabilities. Then we list the stockholders' equity accounts. We plug in the balances, right? So that's why I said in the previous video, hey, you got to know your debits and credits in the normal balance side. This is why we need to know that so we can correctly prepare the unadjusted trial balance. So we add up all the debits, all the credits, and we see in fact that the debits and the credits do equal $65,000. So guess what? By default, our accounting equation also balances. One thing that's very interesting about a corporation is that corporation, and I think now it's much more prevalent than it was in the past. Um, Corporations now have a social responsibility, or they identify, or they recognize rather that hey, we have a responsibility socially, right? So financial reporting is actually constrained by the requirements that only our monetary amount can be reported, meaning we don't report any corporate social responsibility. Okay, within the financial reporting, again, we're just doing the financials. It's all dollars and cents numbers, right? So it's important to recognize that, yeah, corporations are hindered by the financial reporting that they have to do. and that kind of constrains their ability to report socially, right? To report what is their social responsibility. Well, luckily, the Global Reporting Initiative was created to really it was created in an effort to introduce sustainability reporting. Okay, I have a article that I'll post about sustainability reporting that we can read over, and we'll make a discussion question out of it, or discussion post out of it. We'll do that in a couple weeks. But again, this global reporting initiative says, you know what, we got to use sustainability. We got to include it in our reporting, and we got to be able to measure it. Okay, so some examples of corporate social reporting, right? We're talking about things like carbon emission, right? Employee safety, workforce diversity. That's a huge one, right? And I think now as consumers, we're getting much more savvier and recognizing when a corporation buys into their social responsibility, as far as not polluting, or hopefully polluting less, right? Emitting less carbon into the atmosphere, or using sustainable resources, things like that. Reporting on employee safety, even workforce diversity, right? I don't know if you remember, a couple of years ago, Chick-fil-A made a very derogatory comment, and their bottom line suffered. So I think that, and that's a good thing. I think that as consumers, that we start to recognize some of the injustices, and we recognize that we vote with our dollars, right? We don't like what a company says or what a company's about. Well, we're not gonna patronize that restaurant, or that business, or whatever. We're not gonna buy their products. And I hope at least that some of the upper management kind of got the memo, so to speak, that we as a society now are kind of holding corporations responsible, right? Well, guess what? That is the end of the lecture portion of financial accounting. When we come back in our next video, I want to go through a bunch of journal entries, recording them in Excel, and going forward. So please tune back in for that one.